Okay, well, we'll start. Let me introduce myself. I'm John McLaren. I am a tax advisor at the university's tax clinic and also a lecturer in taxation law. So what I've got is a PowerPoint presentation which hopefully will answer most of the questions that you've asked. I have a list of all of the questions, but during the presentation or at the end, I will welcome questions and hopefully I can answer everything that you need to know. So on that basis, I'll now bring up the PowerPoint presentation. And yeah, that's the first slide, the tax clinic webinar, and let's get started. So the next slide, there we are, acknowledgement of country. So we pay our respects to the elders, past, present and future. Now, that's a long way, here we are. So the journey of you, the individual taxpayer, what you need to do. So there have been a lot of questions about, do I need to lodge a tax return? Well, I suppose the first step is you need to obtain a tax file number. And that's particularly important for people coming to Australia. One of the first things you should be doing is applying for a tax file number on the ATO website. So it's fairly straightforward. It's simply www.ato.gov.au, and you'll see a form for applying for a tax file number. You need a tax file number because if you open a bank account, as most people will when they first come to Australia, the bank needs to know your tax file number. If you don't give it to them, then they will in fact withhold tax from any interest that is due to be paid to you. And then what happens is you give the bank your tax file number, you've had tax already deducted out of your interest, and then you need to lodge a tax return in order to get a refund of that tax. So everyone as a starting point should apply for their tax file number, which we tend to call just the TFN. Now, lodging your tax return, there are various ways to have your tax return prepared, but this is using your MyGov account. So you would again go online to MyGov, and there's a process for you registering with MyGov in order for you to lodge your tax return through MyGov. If you haven't lodged a tax return before, then you need to apply for a linking code, which again is a part of the MyGov preparation. And if you have problems with that, we can send that to you through the tax clinic. All you would need to do is to email us and we can send you a very detailed set of steps in order to get your linking code. If you've already lodged a tax return in the past, then it's very simple. You would look at your notice of assessment, and there is a particular number on the notice of assessment, and you would use that to get your linking code. Then once you've done that, you then are getting ready to lodge your tax return. Now you can go to a tax agent and ask them to lodge your tax return, and because they are a tax agent, they're entitled to charge you a fee for preparing your tax return. You can go to a group that are called Tax Help, or you can ask us at the University Tax Clinic and we can help you. Then once the tax return has been lodged, if you find there is a problem with it, well, it's easy enough to amend the tax return, or you come and see us and we can help you with that. And that's basically the process. Now, tax file number declaration. Whenever you start a job, your employer is going to ask you to complete a tax file number declaration. And on the left-hand side, there are, well, on the right-hand, the left-hand side, you simply fill out your name and your tax file number and your address. And then on the right-hand side is the important information. There are a number of questions, and one of them says, are you a resident of Australia for tax purposes? Now, quite clearly, if you come to Australia to study as an international student, you're going to be here for more than 6 months. If you come to Australia to work under a holiday visa, where you might go and pick fruit or do other casual work, then clearly you are a resident for tax purposes. So make sure you tick that box, otherwise you will have a lot of tax withheld from your wage or salary. Now, the second thing is there's another little box that says, do you want to claim the tax-free threshold? And what that means is that you can earn up to $18,200 and pay no tax whatsoever. Now, again, there are lots of exceptions to any tax rule, and one of them is that if you're here as a holiday visa holder and you work in a restaurant or you pick fruit or you work on a farm, you are subject to tax at 15% on every dollar that you earn. So you aren't entitled to the tax-free threshold of $18,200. And sometimes international students who do work over the summer period on farms find that they end up having tax deducted from their salary and wage. Now, that's simply because the farmer treats you as being a holiday working visa holder and will deduct tax at 15%. That's not a problem, because once you lodge your tax return, you'll receive all of that money back. So every job requires a tax file number declaration. So again, if you do 2 or 3 different jobs, again, simply you are a resident for tax purposes. That's not a problem, but you have to decide how many jobs where you want to claim the tax-free threshold. So if you were working at 3 different jobs and you earned $15,000 from each job, and you ticked the box that you wanted to claim the tax-free threshold, you would have earned $45,000 and you would be liable to pay tax, probably in the order of about $6,000 or $7,000, and you would need to have that money saved up in order to pay the tax, otherwise you will be in trouble. So what I'm suggesting is that if you have 2 or 3 jobs, at least with one of the main ones, yes, claim the tax-free threshold, but in other jobs you may not want to claim that, so that you do have tax deducted, which will cover your tax liability. There's another box there that says, do you have a fee help debt? And again, if you owe money to the government for your education, you need to tick that box, because again, if you earn above a certain amount of money, which is around about $46,000, you'll start repaying your university fees. Okay, so how much tax do you pay? Well, the tax-free threshold is 0 to 18,200. Now, these different steps are what we call marginal tax rates. So you need to calculate each step of your income will determine the amount of tax that you pay. Now, these rates don't include the 2% Medicare levy, and I'll talk about that in the next slide or 2 slides time. So 0 to 18,200, no tax. Now, this is important because if you had some casual work and your income for the year was going to be 18,200, and there may well have been tax withheld by your employer because for some weeks that you worked, you may have worked 40 hours for the week. Other weeks you may have only worked 10 hours or even no hours during that week. So there is a likelihood that your employer will have withheld some tax. But the thing that's important to remember that if your income is below 18,200, you do not need to worry about claiming deductions because it will have no impact on your tax position. So if you earned $18,000, but you had some travel expenses, you had some expenses with a uniform that you had to wear, well, that's totally irrelevant because you're not going to pay any tax under 18,200. So the next step is 19%, and you can see that that goes up to 37,000, then 32.5, 37, and 45. So the top individual tax rate in Australia is 45% plus 2% Medicare levy, which equals 47%. But you only pay 47% on anything you earn over and above $180,000. And then the other entity in Australia that pays tax, besides us as individuals, is a company. And the company will pay tax at either 30%, or if they're a small company, they will pay tax at 27.5%. Now, if you earned $75,000, what you would do is you would look at the first 18,200 of it, looking at the right-hand side, and you have no tax to pay on that. So that's everybody who's a resident of Australia for tax purposes. Then on the next, from 18,200 up to 37,000, you're paying 3,572, and then you keep going up to $75,000, plus the Medicare levy, which is 2% of your $75,000. Now, the thing that's important here is you'll see that on the left-hand side, in the red box, it says total taxable income. Now, taxable income isn't assessable income. It's not the income that you are paid from your employment or from your business, because the tax equation works this way. You look at your assessable income, less your deductions, that will equal your taxable income. So it's your taxable income that you multiply the various tax rates with, and you add your Medicare levy. So your assessable income could have been 100,000. You could have had 25,000 of deductions, and that would give you total taxable income of $75,000. Now, at this point, I should add, in Australia, we do not tax gifts of money. So there's no such thing as a gift duty. If your parents or your grandmother gave you $1 million, you would pay no tax on that $1 million, because that amount of money is not assessable income. Basically, we derive assessable income from working as an employee or through a business. So if we had an ABN and we were doing Uber Eats, and we were using our ABN to derive that income as a contractor, self-employed, that would be part of our assessable income from business. And then if we had a rental property and we rented it out, the rent we receive is assessable income. But definitely money given to you by your parents or by your grandmother is a gift. It's a capital receipt. It's not assessable income. Okay, next slide. Medicare levy. So who pays Medicare levy? Well, one of the main things is that if you are an international student, you do not pay Medicare levy because you are required to take out your own medical insurance. So at no time, if you're looking at those figures there, if your income was say $30,000, make sure you don't pay Medicare levy. So when you look at the tax return, it'll have a whole section talking about Medicare levy. You will claim an exemption from Medicare levy for 365 days. If you are here for a whole year, if you arrived in the middle of the year, say on the 1st of January, then you would look at, what am I talking about, half that amount. So Medicare levy is only paid by residents, Australians, who are either permanent residents or citizens of Australia. So that's Medicare levy. There are other people who are exempt. So anybody who works in the military is exempt from Medicare levy. And as you can see, seniors and pensioners don't pay Medicare levy unless they earn a lot more money than just us individuals. Okay, so pay as you go withholding. Again, something that you need to understand about our tax system in Australia. What happens is the government wants money every month. It can't wait till the end of the financial year in order to receive tax that we as individuals would pay or companies. So it requires every taxpayer to pay tax as they go during the year. And we call it simply PAYG withholding. So when you work for an employer and your income is going to be above $18,200, then they will withhold some of that salary and wage and pay it to the tax office every month or every quarter, depending on the size of the business. So PAYG withholding, that's why when we lodge our tax return, if we've earned less than $18,200, but we've had money withheld by our employer, we're going to get it all back when we lodge our tax return. So that's the basis of how we pay tax. Companies do the same thing. They pay tax under the PAYG instalment system. Now, lodgement. So in Australia, our financial year is 1 July to 30th of June. Other countries tend to do it on a 1 January to 31 December, but in Australia we are 1 July to 30 June. Now, if you're going to lodge your own tax return, the ATO likes you to have lodged it before the 31st of October. But that doesn't mean that if you lodge it in November or December, you are going to be in trouble. Tax agents who lodge tax returns are required to lodge 85% of all their returns by the 31st of October. So what happens is the tax office likes you to get the bulk of the tax returns lodged by then, and then the rest can be lodged afterwards. Now, if you're an individual, let's say you've earned $30,000, you've had tax withheld, you're due to get a refund of, say, $500. If you lodge your tax return in November or December, you're not going to be hit with a fine or a penalty. So don't panic about it. It's just that the ATO wants tax returns lodged. Now, this is a good time to answer these other questions. Do you have to lodge a tax return? Now, yes and no, and let me put that in perspective. Sometimes international students, when they're looking at their future, whether it be living in Australia, and they need to look at applications, they feel more comfortable if all their tax returns have been lodged from the time that they came to Australia. But they may not have been working, but they will have had a bank account, they will have been paid some interest on that bank account. They might have done even a very small amount of work. So should they lodge a tax return? In many cases, people want to lodge a tax return. They want to feel as if they've complied with the laws, even though there is no strict legal requirement. Now, people who've received Centrelink benefits, they may have been on AusStudy or Newstart. They may have had a part-time job as well. They may not have earned $18,000 for the year. It may have only been $10,000 for the year. The answer is yes, they do need to lodge a tax return because the ATO wants to know how much money they've earned, and they then pass that information on to Centrelink. So who wouldn't lodge a tax return? Well, self-funded retirees. If your income is tax-free, so if it's a payment from your superannuation fund being tax-free, you might have received some dividends, then yes, you probably don't need to lodge a tax return. However, there may be some franking credits, some imputation credits attached to some dividends, and in that case, it would be wise to either lodge a tax return or complete the form whereby you receive a refund of surplus franking credits. So, most cases, if it's not a lot of work to lodge a tax return, but definitely if your employer has taken money out of your salary or wage, or you've been working as an Uber driver or Uber Eats, or you've been doing some other work as a contractor where you've been providing your ABN, and even if that hasn't been a lot of money, you will need to lodge a tax return because the ATO has been able to track payments to you through either your tax file number or your ABN, your Australian business number. Now, how do you prepare to lodge your tax return? Well, you create the MyGov account, you get your linking code, and then you access My Tax, and you will see how to do it. Now, we have a very extensive set of papers on how to do it. If you're happy to do it yourself, or you can contact us at the tax clinic, and we're happy to show you how to do it. Now, My Tax, yes, very simple. And then when you go into My Tax and you click on income tax, it will come up with something like this, which will show the year, and then it will tell you whether it's necessary to lodge a tax return, and then you click on that, and then you move into the tax return proper. Okay, now you can lodge with a tax agent, and the tax agent is allowed to charge you for doing your tax return. And you can check to see if they are in fact a registered tax agent by looking at that particular website. Probably at this point, I should mention, if you wanted to be a tax agent, not only do you need to complete an accounting degree, but you need also to complete a full year of taxation law. And then you need some practical experience in how to prepare a variety of tax returns, individual, partnership, trust, company, superannuation fund. Then you apply to the Tax Practitioners Board, and they will register you if you satisfy all the requirements. Okay, Student Tax Clinic. Well, just briefly, there are 10 tax clinics in Australia. They've all been established within different universities. They were provided with some financial assistance by the government. We are there to help unrepresented individual taxpayers. In other words, taxpayers who haven't established a relationship with a registered tax agent. They also need to be below a certain level of income. So if you look at our University of Tasmania tax clinic, the average taxpayer that we have helped lodge tax returns, their income has probably been in the order of about $8,000 to $10,000 a year. They have had refunds of about $80, some cases $10, in many cases no refunds, but they needed to lodge a tax return. We also help people who want to start a small business. So what we do is we're able to talk to individuals about the structure of the business, whether it should be as a sole trader, as a partnership, or as a company, how to apply for their Australian business number. In particular, we provide advice on whether they need to be registered for GST, for the goods and services tax. And again, you only need to be registered if your income, your sales figures are over $75,000. So we talk to people about that. And then ultimately we say, well, once the business is established, you then need to go and see a tax agent and establish a relationship with that person who can help to advise you with your business into the future. Again, we help people who have debts to the tax office. We help them to negotiate a reduction, a whole range of other things. The other clients that we've had are basically people just wanting some basic information. So one of the main objectives of the tax clinics is to educate the public. So in the past, we've had visits to schools to talk to students about very basic tax obligations, tax compliance requirements. So we're all about education, we're all about helping people, and of course we are a free service. And again, we help people lodge through MyGov. In terms of our ability to provide tax advice, the Commissioner of Taxation granted the tax clinics the power to, or ability, or the power probably, the legal power to provide tax advice under the Tax Agent Services Act through a notice of Gazette. So we are authorised to provide tax advice, but we definitely do not charge anyone for that advice. Now, amending a tax return, again, that can be done through MyGov, or it can be done on paper, and that's not difficult to do. Checking and paying your tax debt. Well, obviously, if you've been working under your ABN and no tax has been deducted by an employer because you are the employer, you're the sole trader, it's your business, then you might find when you lodge your tax return, you have to pay the tax office some money. In that case, there are arrangements that you can enter into to pay the debt over a period of time, and we can help you if that's the case. So if there are hardships or there are problems, then you just need to let us know at the tax clinic. If there are penalties, because the tax office has the ability to impose penalties, so over and above the tax that you need to pay, they can penalise you. Again, we can help you to have those penalties remitted, in other words, written off, and it's just a matter of letting us know. Now, keeping your tax records. Everyone seems to ask this question. The answer is 5 years. So when we're talking about tax records, it's good to keep your receipts of expenses that you've incurred. But more importantly, if you're using money from your bank account, keep your bank statements. So, I mean, bank statements can always be accessed. You can ask the bank for them. But a bank statement is a very good way of keeping a record of what money you receive and what money you spend. And particularly if you have your own business as well as working as an employee, then make sure that you have a separate bank account for your business so that when you're paid, you've got a record of the amount that you've been paid, and when you spend money in order to earn that income, you've got a record of your deductions. So 5 years is the time you need to keep them. Now, what records should you keep? Well, particularly if you're a salary wage earner, any allowances, but expenses are probably more of the important things. So travel expenses. If you're required to use your motor car to earn your income, but say you're working on farms over the summer period and you have to travel from one farm to another farm, well, then you need to keep a little diary of the date, the number of kilometres you travelled. Clothing, if you're required to wear a uniform for work, then the cost of the uniform, the cost of washing the uniform every week, and other work-related expenses. Now, I'll talk a bit more about those in a minute. Again, if you are selling shares, buying shares, rental properties, you need to keep very meticulous records. Donations that you make. So if you put $2 in a can that someone on the corner of the street asks you for a donation, that won't be sufficient. If you're going to make donations, they need to be more than $2, and you need to obtain a receipt just to back it up. Now, at this point, there's an important thing. When you lodge your tax return, you do not include any copies of receipts or any copies of payments that have been made to you, such as a cheque or any other form of paper records. When you lodge a tax return, it's simply completed online and nothing is attached to it. Now, if everything is within reason, then you won't hear from the tax office. But if there are some deductions that are very high, then at some stage within a 2-year period, because that's the time limit, the tax office might write to you and say, please provide evidence of your deductions or evidence of your donation that you made, because it seems very high. Now, if that's the case, that's when you would send a copy of it. But otherwise, keep the records that the tax return is a very simple online document. Now, expenses. So car expenses, very important. It's a cents per kilometre method. If you use your car for less than 5,000 kilometres in a year, and it's 68 cents per kilometre irrespective of the type of motor car. If you're an Uber Eats delivery driver and you're going to use your car more than 5,000 kilometres, then you would need to keep a logbook. And that means for a period of 12 weeks, 12 continuous weeks, you will record every day, every kilometre that you've travelled. You would write down the odd metre reading. It's what we call the little numbers on your dashboard of your car, and you would need to record what trips are for private purposes, what trips are for business purposes. You add them up at the end of the 12-week period, and that will give you a percentage of your motor vehicle expenses that are for business and a percentage for private. Now, again, it's quite complex. If you have some questions, let us know or come and see us at the tax clinic. If you're travelling and you're spending money on hotels and meals, you need to keep a travel diary. Clothing, uniform, well, it must be a uniform, and I'll talk a bit more about that in a minute. Self-education. So if you're buying books or you're paying for course fees, then you need to keep receipts. Very important. And then decline in value of depreciating assets. That simply means that when you buy something like a computer, over a period of years, the computer declines in value. The more you use it, the older it gets. Eventually, it'll be worth nothing. But if you bought a laptop computer for $1,500 and you're going to claim depreciation, then you must keep the records of it. Now, so I put this slide up just to give you some idea, but don't sort of think you have to manipulate your deductions in order to meet these numbers. But the tax office keeps a record not only of every individual, but every individual and the type of work that you do. So if you're working as an accountant in an office, you're not going to have a lot of work-related expenses unless you're doing some study or you're doing a lot of travel. So your work-related expenses won't be that high. However, if you're a plumber or a carpenter, you might end up having to buy tools. You might have a motor car that you use to carry your tools. So your work-related expenses could be a lot higher. But the tax office benchmarks different types of occupation to see what would be the average or the median work-related expenses. So you can see there, the average is about $2,400. Going to a tax agent to have your tax return prepared, well, the average is about $171. Gifts or donations, about $110. So if you, in your tax return, you showed that you made a donation of $5,000 and your income was $50,000, you would probably be questioned by the tax office as to why the donation was so high. Other deductions, which include things like self-education, a range of other travel-related deductions. So you can see there the average about $1,500. So the total claimed, you can see. So just bear in mind that if you want to claim a lot of deductions, you may well be asked to substantiate the expenses and you would need to have the records. Otherwise, the tax office can amend your tax return, impose penalties and interest. Okay, now working from home, COVID-19. There is no specific deduction as a result of the pandemic. So what there is a special arrangement if you're required to work from home. And what the government has done is they've given us this shortcut method, but it only operates from 1 March to 30th of June. Now, the government may extend that beyond the 30th of June into the next financial year, but I suppose what the government was hoping that people would be back at work by 1 July. Now, this is, if you're working as an employee from home, you can claim 80 cents for each hour that you work at home. Now, if you do your sums, if you work out that you spend 40 hours a week working and at 80 cents an hour, it's going to equal $32 for the week. For that period from 1st of March to the 30th of June, I think it works out at about 12 weeks, about $400 maximum. So quite clearly, if you claimed home office expenses of $1,000, you would have to prove to the ATO that you only sleep for 4 hours a day and the rest you were working, or you would have to come up with a reasonable explanation, or there would be problems. Now, why would we use this shortcut? Well, we can use it because we don't have to calculate our actual phone expenses, our internet expenses, the depreciation on our equipment and furniture, and we don't have to work out what proportion of electricity we use for heating. So what that means is that it's a lot easier to simply say, okay, 80 cents an hour, I do 8 hours, 8 hours a day, and that's what I will claim. That will cover my telephone, my internet, my depreciation. It also gives you one other big advantage. You don't have to prove that you have a dedicated home office. So even if you're working on the dining room table or you're working in the lounge room, you can still claim the 80 cents an hour for this special time, this COVID-19 special arrangements. But if you do that, you can't claim any other deductions. Now, if you don't like that, you can use the fixed rate method. So again, the tax office says you can claim 52 cents for each hour, and that covers the depreciation on your home office furniture, your furnishings. It covers your expense towards the electricity or gas. It also covers cost of repairs. So quite clearly, if you had to get your computer repaired or you had to get your printer repaired, that might be $200 or $300, and you won't be able to claim that if you're using the 80 cents a kilometre method. Now, what happens is if you claim the 52 cents an hour, you also then need to claim your telephone expenses and your internet expenses and your depreciation on your computer, on your laptop, your telephone. So for instance, if your internet expense was $80 a month and you were using your internet 60% for your work purposes, then 60% of $80 is $48 you would be able to claim as a deduction over and above the 52 cents an hour. Similarly, with your telephone, if you have to ring clients or you have to ring the office, you can claim the actual percentage of the expense of your phone. Your computer, if you'd gone out and bought a new laptop computer, you might want to claim depreciation on that, because that could be anywhere from $500 to $1,000, which again is better than the 80 cents per hour under the COVID-19 special arrangement. So if your income is below 18,200, you don't need to worry about deductions because you don't pay tax. If your income is a lot higher than that, we may not be able to give you advice on this because you should go back to your tax agent, but let us know if you do have some issues. Okay, now the last few slides deal with some issues where people get into trouble if they try and claim things they shouldn't claim. And again, I'll explain why that's very important. You cannot claim the cost of travel between home and work, but you can claim the cost of travel from one place of work to another place of work. Now, obviously, if you had to carry a portable piano, or you had tools, very bulky tools that were part of your job as a plumber or an electrician or a builder, then quite logically your travel from home to work should be a deduction, because how else would you be able to transport your equipment? But again, you would need to keep good records, and if you're using your vehicle all the time for work, you need to keep a logbook. 12 weeks continuously to determine what percentage of use of your vehicle is for private and what percentage for business. Now, travel claims, travel allowances. meals and things. Now, if you have to travel interstate for your employer may provide you with a travel allowance, which includes being able to claim the cost of meals. But if you're working a late shift in Hobart, you are not entitled to claim the cost of meals. What else is... Again, you need to apportion expenses. So if you're using your internet for work purposes, but you're also using it for private purposes, you must arrive at a percentage and apportionment of those expenses that makes sense. Okay, now, clothing and uniform. Simply having to wear nice, clean, neat clothes to work does not entitle you to claim a deduction for the cost of the clothing or for the expense of washing or dry cleaning. However, there are some jobs that we do where the employer makes it compulsory that we wear the uniform. In that case, you're entitled to claim the cost of buying the clothing and keeping the clothing clean. Now, self-education expenses. Again, they must directly relate to your work. So if you're an accounting graduate and you need to qualify to become a member of one of the professional accounting bodies, and you spend thousands of dollars undertaking those particular subjects, that would be directly related to your work and you would be able to claim a tax deduction. If you were working as an accountant and you went off and did a course in learning French language, unless you were planning on working in France or you had a lot of French clients, then there is no connection between your self-education expenses and your work activity. So therefore, it wouldn't be deductible. Also, it's important to understand how we pay for our education at university. If you're an Australian permanent resident or a citizen of Australia, you can attend university and you are charged a reduced fee for attending university, which is what we used to call the HEX payment. Now, if you have a HEX position at university, which is about half the cost of what international students pay, there is no deduction for the cost of repaying that particular fee. So HEX fees can either be financed by the government and you pay them back once you start work, or you can pay them each year when you incur them. Those fees are definitely not deductible. They're not deductible if your employer pays them. They're definitely not deductible if you pay them. However, if you were paying the full fee, and all postgraduate courses at university are full fee paying, if you were to pay the full fees for a postgraduate course and the government was providing the finance for it under the HELP scheme, HELP, higher education loan, whatever, and then when you start working in that area, you're entitled to claim a tax deduction for the amount that you pay. So let me give you an example. If you were studying, if you're a teacher and you've finished your bachelor's degree in education, and then you decide that you're working as a teacher, but you need to undertake a master's degree specialising in a particular area of education. You attend university. The cost of that course is funded by the government under the fee help arrangement. And so you now have a debt of $50,000. You're working as a teacher. Your income is $70,000. You start repaying that particular debt, then you're entitled to claim a tax deduction. And the law for that is found in a practice statement. Again, in that situation, you're a teacher. The additional self-education relates to you enhancing your professional prospects as a teacher. Therefore, it is legitimately deductible. Now, can I claim work from my clothes? My boss told me to wear a certain colour. No, unless it's a uniform. I've got a capped phone plan, so can I claim both business and private? The answer is no. If I use an agent, they will take responsibilities for my claim. Again, no. Now, very importantly, whatever you tell your tax agent will, within certain bounds, accept what you claim. In some situations, they'll ask for you to show them a receipt to substantiate that particular claim for a deduction. But if you lie about your deductions, the tax agent prepares your tax return for you. You're asked to have a look at it. You are asked to sign the declaration that everything in it is correct. And if subsequently you're audited by the tax office and you find that you don't have the right to claim that deduction, the tax office will take action against you and not your tax agent. So make sure that you check what you sign. Now, other issues. So this is what I've gained from what people have sent in terms of their questions, and there are some others, and I can see, I think we have some further questions. So, money given to you by your parents, definitely not assessable. The ATO does not need copies of your receipts, but you need them in case they do ask you for them after they've processed your tax return. So what you need to remember is that when your tax return is lodged, and if it's lodged electronically, the computer system processes it. If you are due a refund, the computer will process that. The money will be paid into your bank account. If at a later date, tax office writes to you and says, your deductions seem to be very high, will you please provide copies of your receipts? That's when you'll need to do it. Now, JobKeeper. JobKeeper applies to employers who want to keep their employees. The government provided funding to the extent of $1,500 a fortnight that was paid to the employer, and the employer in turn paid the employee their salary to keep them on the books, to keep them as an employee, so that when they are able to return to work as a result of the coronavirus being kept under control, then they would be ready to start work again. The JobKeeper payments, in the same way as the JobSaver payments, are assessable income in the hands of the employee. Now, in order to satisfy the JobKeeper requirements, you must be a business, you must have employees, and you need to show that your sales have dropped by more than 30% in a comparable year. So if your sales drop by 30% in March this year, you would compare that with March in the previous year. The comparison is done on the basis of GST. The whole process is quite complex. If you do have a business and you think you are eligible, you need to go back to your tax agent, who will look at the circumstances, look at the facts, and they will calculate what your turnover was and is in order to see that you satisfy the requirements. Capital gains on shares, is it assessable? Absolutely. Capital gains are in fact part of your assessable income. So if you bought some shares and you sold them at a gain, you would need to include that gain in your assessable income. Just remember that when you buy shares in Australia, you have to provide the share register with your tax file number. You are given a special CHESS number, CHESS being the system of recording the owners of shares in public companies in Australia. And so if you don't include it, the ATO will have already tracked that particular sale and they know that you've sold those shares. Likewise, they know when you buy the shares. Less than 18,200, I've talked about that. Setting up a food business. Again, in Australia, there are very limited requirements on you wanting to establish a business. So from a tax point of view, if you want to establish a business, the first step is to determine what structure you want. But if the business is going to be in your name as a sole trader, then the first step is to get an Australian business number. And that form that you fill out online will ask you for your tax file number. Now, in terms of a food business, you need to look at the local councils. So the local council have food inspectors. So in order to set up a food business, you need to make sure you comply with the requirements of selling food. But that has nothing to do with your ability to buy a food van or to buy a restaurant or to set up the business in terms of tax requirements. Now, the other one's important. If you're an employee and at the same time you're using your ABN, very simply, there is no separate tax for business income versus income you earn as an employee. So when you do your tax return, you would simply, you'll have under the pre-fill arrangements, your income from your employer and any tax deducted will show up when you open up your tax return form. And then if you've been earning income by issuing a tax invoice with your ABN on it, you simply add that to your assessable income and claim whatever deductions you have, and then then that will determine whether you have to pay tax or you receive a refund. Now, claim HICS or fee help, I've talked about that. Is property investment a business? No, it's not. Basically, owning 2 or 3 investment properties that you rent out is not considered to be a business. Owning rental properties is considered to be a passive investment. Same way that when we buy and sell shares, generally it's not a business. We simply do it as a capital investment. So in order to make renting out properties a business, you would need to perhaps have a business doing maintenance, and you went around and you did maintenance on the properties. But in terms of the rental income, it's passive investment, it's not a business. How do you start a superannuation fund? Well, anyone can go along to a superannuation fund. You can do it online, and you can become a member. Now, there is a superannuation fund for students called, I think, Student Super, and they don't charge fees. But again, if you're going to start work and you are going to earn more than $450 a month, the employer is legally required to contribute 9.5% of the amount of your salary or wage into a super fund, and you can nominate the fund that you want it paid into. Now, instalment activity statement, again, a very important document. If you were an Uber Eats or an Uber driver, and that was the main form of your income, you're basically in business. You're running your own business. Even though you're an individual, you're a sole trader, it's your business. So if each year when you lodged your tax return, or particularly the first year, you received $50,000 of taxable income, let's say it was $70,000, but you had $20,000 of deductions. So you had $50,000 of taxable income. You would be liable to pay tax on that of about $6,000 to $7,000. So you would lodge your tax return, you would pay your $7,000 of tax, and then very quickly after that you would receive an instalment activity statement. And you will receive 4 of those a year. And basically what the ATO, the tax office, is wanting you to do is to pay tax every 3 months based on the tax that you paid in the previous year. So what will happen is you'll be paying tax as you go, but not under the PAYG withholding system, as all employees do, but you will be paying tax as you go under the instalment activity statement based on your sales figures and the instalment rate that the tax office gives you. But basically they're asking you to pay your tax as you go through the year based on the tax you paid the previous year. So that's what an instalment activity statement is. Now, a few other questions that came in, just very briefly. If, let's say you come to Australia on the 1st of January. Let's assume that you were working in the United Kingdom prior to that date. You arrive in Australia on the 1st of January and you're taking up a permanent job and you're going to be here for at least 3 years, if not longer. what's your situation? Well, basically, the first thing you would do is apply for a tax file number. You would fill out that employee declaration form. You would claim the tax-free threshold, and you would start earning assessable income. And yes, and would and you would then be liable to lodge a tax return after the 30th of June of this particular year. Now, your income that you earned in the UK up until the time you left the UK would require you to satisfy Her Majesty's Customs and Revenue and Customs Department, and you would pay tax in the UK on that income. When you arrive in Australia, you would pay tax on your income that you derived in Australia. Bearing in mind that that tax-free threshold of 0 to 18,200, you would only be entitled to 6 months of that. So your tax-free threshold would be $9,100. And then you would simply pay tax in Australia on that income. Now, I think that's probably it. What have I got left here? Questions? Now, what do I need to do?
A Q&A answer. Yeah.
This one here. Right. Okay, the questions I can see. What is the average amount charged by a registered tax agent to file tax returns? Look, for a simple individual one, I think from what I can gather, the minimum amount is anywhere from $120 to $140. But if you had some capital gains, if you had some income from a rental property, it could be anywhere from $140 to $350. Now, a UTAS scholarship, is that taxable income? Look, again, the answer isn't that clear-cut. Most of the scholarships the university offers are in fact exempt from tax, which means that you don't include them at all in your tax return. Therefore, if you had a scholarship of, say, $28,000 a year, and you had a job doing some tutoring of $10,000 a year, your taxable income would only be $10,000. You don't pay tax on $10,000, so you would pay no tax. But there are some scholarships that are provided by external organisations that may be taxable, but in the main, generally, UTAS scholarships are exempt, so they're not even taxable or assessable. They are totally exempt. Now, if I have a full-time job, can you claim travel expenses to get from work to and from work each day? Is a logbook necessary? You cannot claim a deduction for your travel expense from home to work. Now, if you're an Uber driver, your place of work that you start is basically your home. So you would look at the travel from your home office, then your home, to go and pick up passengers or to deliver food. You would be able to claim a travel expense. In that situation, you would be better off with a logbook because you're probably going to travel more than 5,000 kilometres. If you use the cents per kilometre method, then all you can claim is 68 cents by $5,000. If you're using your car for 10, 15,000 kilometres a year, a logbook would be necessary because that might show that you're using your car 20% for private, 80% for business, and that means you would claim all of your expenses, your fuel, your registration, your insurance, depreciation on the car in a proportion of 20/80, and you would then gain a bigger tax deduction, but you would need to have the logbook to be able to show that. Now, let me go down to the next. What about if you use your car to get to work each day and you get your car commercially cleaned? If you keep the receipt, could you claim on that? The simple answer is no, because if the car was a work-owned car, so let's say you had a business and your car was used for work purposes, then the cost of having it cleaned would be deductible, but again, on the basis of your logbook. Now, what I mean by that is that if you're a carpenter and you have a utility that you keep all your tools in, the chances are that utility is not going to be used at the weekend to take the family to the beach. So if it was owned by the business, you as a sole trader, and you used it 100% for work purposes, then the cost of cleaning would be deductible. But if it was your car that you use for Uber driving or Uber Eats, then it would depend on the percentage on your logbook. Now, next one, how exactly does asset depreciation work? If depreciation on a piece of equipment is $300, is that the amount you get back dollar for dollar? Absolutely not. Unfortunately, a deduction is only the equivalent of the amount of assessable income that is reduced by that deduction. So if your income was $100,000 and your marginal tax rate on $100,000, I think is, if I look here, the average rate is 37%, and you claimed a $300 deduction, then it would be roughly $300 by 37% or 39% adding Medicare Levy, so roughly $120. So deductions don't give you dollar for dollar back. If you're on the top tax rate of 47%, a $300 deduction gets you $300 by 47%. That is the value of that deduction. If you owned your own property and you Airbnb'd your spare room, would you be able to claim for maintenance costs, such as repainting that room? Yes, the simple answer would be yes, provided what you did to the room didn't constitute a repair that may not be deductible. But things like maintenance costs, so if you had some tenants in your spare room and they made a mess of one of the walls and you repainted it, then yes, definitely it would be tax deductible. Would the tax clinic be able to provide an information booklet for those who want to do the tax returns themselves? Definitely we can, and we'll make sure if you send us an email asking for that, we'll make sure we send it out to you straight away. And I started studying in Hobart this year, January. If I'm earning monthly rent for my apartment in my home country, and if I'm transferring that money to Australia to pay for my accommodation and living expenses during my study, do I have to pay tax on that income in Australia? Australia's tax system is what we call a worldwide system. Once you are a resident of Australia for tax purposes, it means that you should include all of your income, not only income earned in Australia, but income earned in any other part of the world. Now, that income that you would be paid in your home country, it's quite likely that that income would be subject to tax in the home country. If it was, then you would receive a credit for the tax that's already been paid on that income, and that would help reduce any tax that you would have to pay on that income in Australia. If that income wasn't being taxed in your home country, then again, it legally should be included in your assessable income in Australia. The fact that it's been transferred to you may or may not be a particular issue. I have a part-time tutor job and I have some salary less than $100. I also receive bank interest. Do I need to report my bank interest when I lodge my tax return? No, you don't, simply because the tax office already knows how much interest you've been paid. When we open a bank account, the bank says to us, please provide your tax file number. We provide that to the bank. Every year, the bank sends a list of every account holder in Australia with their tax file number and the amount of interest that they've earned. And so when you open up your tax return, the actual form, you will see that the interest has already been included on your form through what we call the pre-fill. So every employer in Australia provides the tax office with details about how much money you've earned and how much tax is being withheld. And that shows up in your tax return. So the tax office pretty well knows what we've earned, who we've been working for. The only thing they don't know is what our deductions are. And that's why we prepare a tax return. So no need to worry. They definitely know how much interest that you've earned. Okay. I received government funding during COVID-19. Do I need to claim this as my income when I do the tax return? Look, this was something I had been thinking about because there are different types of funding. If the Tasmanian government provided you with some funding, that may or may not be assessable because it's provided by the state government, not the Commonwealth government. But if you were provided funding by the Commonwealth government, then in most cases it would be assessable income that would need to be included. You would need to look at the actual details of the funding. Without more detail, I really can't answer that. I'm sorry. Okay, now.
What is that from
Okay. Could you explain the deduction again? 300 is by the tax rate. Well, let's take an actual example. Let's say your assessable income was $100,000. If we look at the slide, I suppose you can't look at the slide, but if I look at the slide where I gave you the different tax rates, if I'm earning $100,000, I'm paying the top marginal rate of 37% on the income I receive between $90,000 and $180,000. Because remember, we have different marginal tax rates. The higher your income, the higher the amount of tax that you pay. So if my income is $100,000, my rate of tax on anything above 90 is 37%. But I also need to add 2% Medicare levy. So that means that my tax rate is 39%. Now, let's say I have a tax deduction of $1,000. My assessable income is $100,000. My deduction's $1,000. My taxable income is now $99,000. I pay tax at 37% on the $99,000. That $1,000 deduction is only worth a reduction in the amount of tax that I have to pay of $390. In other words, my tax on $100,000 is a particular number. My tax on $99,000 has been reduced by $1,000 deduction, but the actual tax saving is $390. That's $370 plus $20 of Medicare levy. Hopefully that makes sense. Just have a look at the tax rates, do the numbers, and you'll see that that's what it is. I mean, sometimes you might have a tax deduction of $50 and your tax rate is 19%, and you'll think, well, 20% of $50 is $10. Is it worth claiming the deduction? Okay. Now, if you're a sole trader with your own ABN and you occasionally use your car for business, then could you claim all of the registration costs or only a proportion of it? The problem is here, and it's a bit unfair, but you would need to have a logbook. You would need to keep a record for 12 weeks because you wouldn't know what percentage was related to your ABN business and what percentage was related to your own private use. So again, it's a lot of work to put together a logbook over 12 weeks, but it does make the difference because then you would have evidence that you're entitled to claim a proportion of the registration cost, the insurance cost, the petrol, all of those expenses. But otherwise, without the logbook, you would have no evidence to show that it was being used for business. Okay, this is my third year in Australia, and I did not lodge a tax return for the previous years because I did not have jobs at that time and I was only studying. This year I got a job and I'll lodge a tax return. What will happen is this: when you if you go into MyGov and MyTax, you will see that the previous years are already in the system. And so what you would, I'm not saying you would have to do it, but it would be a very simple thing to go back into the previous years, because there will be something there. It'll be some interest on your bank account. But what you will be able to do is you simply go in, basically confirm the details of your bank account, of where you live, and then you will click lodge, and there'll be no refund, there'll be no tax paid, but it will in fact provide the evidence of what's been happening. So in other words, it just confirms to the government that you didn't have any other income other than bank interest, and then and it would take all of about 2 minutes to do. But legally you wouldn't have to, but what I'm saying is it will show up anyway. So it's a very simple process to lodge them. Is the interest on bank deposits assessable? Yes, it is. But the good thing is that the banks provide that information to the tax office, and it will show up on your tax return when you go in to do it under the pre-fill arrangements. Now, do I need to keep a 12-week record in a logbook every year, or is there a time limit? No, you don't have to do it every year. It's okay to do it once every 3 years. Look, it's time consuming, but once you could put the data on your mobile phone, so you would record how many kilometres the car has travelled at the at the end of the day. Then the next day you would use that figure to record what the car's being used for, and that should provide the answers for you. Okay, now.
One more. If you
Right.
there are chat, yeah, click on chat.
Right, okay. How do I, let me have a look. Okay, so that's good.
You can start from the top. It's like scrolling here.
Scroll here. Okay, I did not know student visa, so I paid that last year. Okay, so if you've paid Medicare Levy when you didn't need to pay it, it's very simple to amend your tax return. If you had your tax return prepared by a registered tax agent, then that is very unfortunate, because they should have asked you that question and they shouldn't have made that mistake. If you did it yourself and you need some help, let us know in the tax clinic. Otherwise, you would simply go back into MyGov. You would access the tax return that you did. you would press the little button that says amend. You would go into the Medicare Levy section. You would claim the exemption and you would put 365 days exemption. Then you would simply go down and lodge again. That would show up that you're due a refund. The tax office, the computer system, has the ability to look, to connect with immigration to see that you are in fact a student and you should be entitled to that money back. So please, yes, you simply go in and amend your tax return, remembering that you have only 2 years in which to amend your tax return. Okay.
There are a few more checked. Yeah.
Okay. Tax liability on investments on EFTs. Well, it depends on whether your investment activity constitutes a business or whether it's on capital account. If it's on capital account, if it's a capital investment, in other words, you're not buying and selling every few days, then it would be treated as a capital gain or a capital loss. If you're actively trading, it could constitute a business, and therefore it would just simply be part of your normal assessable income. But you would need to look at perhaps contact us to have a meeting. But obviously, if you're trading in these investments, you may not qualify to receive advice from the tax clinic. You may well be earning too much money. But anyway, how to maintain a logbook, I think we've covered that. Right, good. So that's...
Close this and stop sharing, and then the video will appear.
And I think this one, shall I?
Stop share.
Stop share, right. Okay, well that brings an end to the presentation. We've been going for nearly. Oh no, we need. There's still some questions, are there, or not? No, I think we've answered all of those. So if you need any more detailed advice, contact the tax clinic and we'll arrange a proper client discussion. If you need further information that we can send to you, please let us know, and we do have lots of material. There is one more chat here, I think. Let's see. Thank you, Warren, and that's it. Thank you.